We're going to talk about that because I'm sure people are saying, what about AI? Where is he investing? Don't say it. We're going to take a quick break.
Let's take a break, everybody. Let's take a break.
We'll take a break and we'll get into it in Pro Picks. Pro Picks is brought to you by ATB Financial. With $62 billion in assets, ATB Financial is powering possibilities for more than 820,000 financial services clients in Alberta and beyond. ATB's Capital Markets arm is a full-service investment dealer that offers investment and corporate banking, sales and trading, institutional research, and risk management. Visit atb.com/inthemoney for more information. Okay, now we're going to find out Brian Belski's highest conviction areas of the market. So exciting. So I didn't talk to you about AI on purpose because I knew that you wanted to save it as a high conviction area, but maybe not the obvious areas. How do you think about the AI trade?
No, I think everybody wants to talk about semiconductors, which I think is at the forefront. They're the connectors, literally. And then you have software companies, which are really the facilitators, I like to call them. But I think, and then other people too, it's interesting, want to talk about how utilities are, how are you going to power this? So I always ask people, questions, to get them to understand kind of the way we think. So with respect to utilities powering AI, I go back to, I always ask people, so do you know what the largest, alternative energy company is in the world? Do you know?
Is it an oil and gas company?
It is.
Is it?
You're so smart.
No, is it like Exxon or BP?
It's BP. Oh my gosh.
Well, I should do this for a living. Man. I should maybe do this for a living.
British Petroleum is the largest alternative energy company in the world. They spend more money on alternative energy than the entire publicly traded market cap space of alternative energy companies in the world.
For now.
But think about this. So then let's play that on utilities. Everyone's trying to figure out who the next power generator is going to be. The way to think about it is, think about OG utility companies like Southern Company or Duke or the old-fashioned ones, NextEra, or even here in Canada, Fortis, because they have the infrastructure and literally own the power grid. But I think so that's a theme that people talk about. I like to talk about things that people don't talk about. Let me ask you a question. Do you have a phone?
Yeah.
Have you texted during this interview somebody because it's boring, right?
Never. I was like, you can't believe what brother just said.
So all I'm going to say to that is they know where you are. Okay.
Who's they?
They. So how do you combat they?
Yeah.
Cybersecurity.
I think you have to say it louder.
Cybersecurity. Can you hear me? Is this thing on? Cybersecurity.
Okay.
So I think
that's the high conviction idea, cybersecurity.
Yes,
for AI.
Theme of AI is cybersecurity because you have to protect everything. So what are, names like in terms of themes would be like a Palo Alto theme or a Checkpoint, and CyberMark. These are companies from that perspective that I think are only going to literally power the protection of AI.
Because the AI is getting so creative. I mean, your pal David Rosenberg, there was just a report about how AI basically used his likeness to defraud a bunch of people. So you're going to
scary. It's scary. So again, that's why it's so important to only buy companies and invest people that you can actually reach out and touch and have a relationship with.
Okay, so that's your AI trade, is look at these cybersecurity companies potentially. You mentioned your big call, start the podcast, your big call, 2007, sell financials. And here you are, 2025? Yeah,
I think so.
That's our 2025. Buy financials.
Yes. Now in Canada, most Canadians don't understand the U.S. banking system because you have 5 banks here and another one. In the United States of America, we have 600 publicly traded banks and 4,000 banks overall. And so our major theme there is scale and relationships. What does that mean? So the big banks, whether that's JP Morgan, Morgan Stanley, Goldman, Bank of America, Berkshire Hathaway. I mean, these are big scalable businesses with multi-divisions of assets, right? So it's wealth, capital markets, personal, commercial, all this kind of stuff. And so they are much better positioned for, I think, going forward relative to the regional banks. But you're a parent, right?
Yeah.
So sometimes we have to overcorrect our children, right? When we're parenting, we've overcorrected financials because they've been held down too much.
The large caps or even the regionals?
In general. So in regionals, I think are going to have a really hard time competing. So I think, what does that mean? So I think the trend going forward is going to be deregulation. So I think that's ultimately going to cause consolidation. So these regional banks, these non-money center banks can actually compete with the really big ones. Now I want you to think about something completely different. The relationship side of things. I think the small financials in the US got a bad rap because of what happened in 2023. Now, the banks that got over their skis in 2023 were an ATM card for the private equity companies. They weren't, mom and pop in Palo Alto, California were not going to the ATM machine and pulling out their cash. It was private equity, right? So the small cap banks in the United States have become pristine assets in terms of their balance sheets and their cash flow, and they rely on great relationships. So the corner bank in America that's a publicly traded company is going to get the commercial loan from their buddy across the street way before Citibank or Chase or a Bank of America is, because of the relationship. So there's a theme in the small cap financial world too.
Don't you need a healthy though credit cycle? And like, regardless of you saying tariffs, they'll be fine, everybody chill out, it does create a paralysis. And so people aren't sure, should I invest? Well, in the US, you probably should invest in making American jobs because that makes somebody very happy. But you're not necessarily sure.
Well, the credit markets are actually amazing. They're showing no chinks in the armor at all. And spreads have held in there quite nicely. Again, you think about how everybody thought we're going to have a commercial banking crisis, a commercial real estate crisis. How'd that go? That never happened. Thought we were going to have a real estate crisis in Canada. How'd that go? It didn't really happen. So again,
you have pain points. Let's be clear.
Of course, you have pain points, but again, you can go back.
Widespread crisis.
Exactly, you can go back to real estate. It's all about location, right? And I'm not a real estate person, but that's the way that it works. But in terms of the credit side of things, credit's very available. By the way, these banks are so much better managed than they were 20 years ago, and so I think there's a big cycle coming in terms of financials.
Your final pick, and maybe this complements that, is looking at small cap value investing is back. It's back, baby.
It's back, baby. What's really interesting is if you take a look at the number of companies that are below $10 billion market cap in the United States, it's straight down the last 20 years. So think about contrarian, number one. Number two is that these companies, relative to the way I learned them a long time ago in a galaxy far, far away, these companies, they grow their earnings consistently. Some of them pay dividends. They have great cash flow. They have better balance sheets. And I think they provide liquidity because people need liquidity, even relative to private equity is really exciting. Everybody wants private equity now. But at the end of the day, they're not liquid. And so I believe small cap companies provide that kind of liquidity relative to private equity.
I'm so glad you brought that up because everybody does want, get access to private equity and get access to private credit. Where's the transparency? Where's the liquidity?
They said the same thing about hedge funds in 2008.
And?
How'd that work out?
Not well?
Not well.
There you go.
So, again, I think history repeats itself. It's just different players. It's never different this time, but it's just different players like a baseball game. But at the end of the day, I think that fundamentals matter and the fundamental construct of the United States stock market, but then certain areas like within value investing or small mid-cap investing, to me and to my great team, look extremely interesting and ones that we continue to do a lot of work on.
So I'm looking at the Russell Value Index, and it has really it's struggled. It's kind of middling along. You see a breakout in this class of stocks.
Yeah, this is a longer term. This isn't a 2 to 3 week call. This is a several year call.
Gen Z wants their money doubled by the end of the week.
I did a speech today, and there were some youngsters in the crowd, and I always say, "You guys, Gen Zers." I said, "Okay, so if I say anything to make you mad, you're free to walk around the block, have some alone time. You can come back and compose yourself, have a little alone time. It's great." But I think you can play the Gen Z theme. So Gen Z versus, here's the theme for the consumer, right? So I push my group to say, okay, what are they spending their money in, these Gen Zers, right? So I think that Shake Shack okay, is to Gen Zs what Chipotle was to the millennials.
It's the new avocado?
Yeah, man. Like my son was at university, we call it college in the United States. That kid spent more money at Chipotle when he was in college than I think any human being possible. But this is the way I kind of think. You want to think a little bit differently in terms of a theme on that.
All right. I like it. We'll call that a bonus pick.
A bonus pick.
Brian, what a joy.
Amber.
Thank you. Do you want the final word? I feel like you want the final.
No, I actually don't.
Okay. You were fabulous. Did I forget anything? I don't think so.
No, listen, I am excessively humbled. I can't believe I've been doing this long. And it's been an amazing run at BMO. BMO's been great to me. This is a relationship business. I've met so many awesome people here in Canada throughout my entire career. And it's really interesting because we started off the podcast talking about me being positive, and I've taken a lot of heat. And I've taken heat in broadcast, but I've always tried to stay level-headed and have the humility hat, number one. Number two, to me, it's been so amazing. I've heard from stockbrokers, we used to call them stockbrokers back in the day, from stockbrokers that I knew from 1993, like when I first got on the sell side. I started in the business in 1990, but that said, I can't believe they're treating it like this on TV and we're with you, Belski, and all this kind of stuff. To me, that is so humbling that people would take the time out to find me to do that. But to me, that's why no matter how much we go through the crisis and issues and politics and all this kind of stuff in the financial services industry, this business is an awesome business and it's all about the relationships. So Amber, I think we have a pretty good relationship.
We do, yeah.
And so I'm so humbled to be on your podcast, and thank you so much for having us.
Well, I'm grateful that you chose to spend some time with us on a very busy day. And to your point, I'm grateful to BMO too. They are one of our sponsors, and they signed on before we even had a first episode.
See, that's forward thinking. That's leadership. That's what that is.
Okay, enough for BMO. That's enough. Thank you so much.